Just a quick note before we dive in. This video is for informational and entertaining purposes only and is not financial advice. Always do your own research or consult with a licensed advisor before making any investment decisions. Palantir Technologies Investor Briefing, June 25th, 2025. The story of Palantir Technologies is one of disruption, resilience, and ambition. An enterprise born in the shadow of national security concerns that evolved into one of the most controversial yet powerful data companies of the 21st century. In 2025, Palantir stands at a pivotal intersection. No longer merely a defense-focused outlier, but a maturing tech firm with growing commercial influence, a formidable government backlog, and a sharpened focus on artificial intelligence infrastructure. The question for investors today is not whether Palantir is visionary. That's long been established. The question now is whether the vision is being realized fast enough and profitably enough to warrant the valuation the market is slowly beginning to accept again. Since its 2020 direct listing, Palantir has been a lightning rod for speculation, attracting believers in its long-term mission just as quickly as it repelled critics of its elusive profits and unorthodox strategy. But fast forward to mid-2025, and the tide is shifting. Institutional interest has grown, financials have turned a corner, and perhaps most crucially, its long-touted commercial platform, Palantir Foundry, is gaining traction far beyond government corridors. To assess Palantir's investment case in 2025, we need to look at what the company has become, the numbers it's now producing, and the challenges it must still overcome. Company evolution and business model. Palantir began as a counter-terrorism data integrator funded by In-Q-Tel, the CIA's venture arm. For nearly a decade, it operated largely in the shadows, serving defense and intelligence communities with Gotham, its classified analytics platform. Today, that product still underpins the company's government division. But the modern Palantir is far broader. It now stands on two main pillars: Gotham for government clients and Foundry for commercial enterprises. A third platform, Apollo, handles software deployment and orchestration, essentially enabling clients to run Palantir products at scale across varied environments, including air-gapped classified networks. The core of Palantir's competitive moat is its operating system for data. Unlike traditional software vendors, Palantir embeds its engineers deeply within client organizations. This high-touch approach has drawn criticism for being consulting-heavy, but in practice, it leads to deeply integrated, mission-critical implementations. The company often becomes indispensable, particularly for customers managing vast, chaotic datasets, such as logistics networks, intelligence pipelines, or healthcare systems. Revenue today is roughly split 55-45 between government and commercial customers, a major shift from the nearly 100% government dependency a decade ago. U.S. government contracts remain the financial backbone, with multi-year engagements from the Department of Defense, Homeland Security, and even the UK's NHS. But the commercial side is where growth is accelerating, driven by companies like Ferrari, BP, and Airbus using Foundry to optimize operations, supply chains, and R&D. Palantir's secret sauce lies in its ability to integrate messy, siloed data across entire enterprises and deliver real-time operational decisioning. In a world awash in machine learning and AI buzzwords, Palantir distinguishes itself by focusing not on experimental algorithms, but on usable infrastructure, turning AI into action. It doesn't just provide predictions, it enables decisions. This distinction has become especially relevant in 2025 as enterprises grapple with deploying AI securely and responsibly. Financial analysis. Now let's turn to the numbers, which for years were Palantir's Achilles heel, laden with stock-based compensation, red ink, and skepticism about scalability. But that narrative has begun to change. Revenue and net income. Palantir's trailing 12-month revenue now exceeds $2.7 billion, up from $1.9 billion 2 years ago, representing a compound annual growth rate of over 18%. This is solid mid-teens growth, though down from the hypergrowth phase of its 2020-2022 commercial expansion. Importantly, this growth is now accompanied by real profitability. In Q1 2025, Palantir posted its 7th consecutive quarter of positive net income, reporting $126 million in GAAP profit. Net margins have moved firmly into double digits, suggesting that the company's operating leverage is finally materializing. Margins and profitability. Palantir's gross margin remains exceptional at over 80%, consistent with high-value software-as-a-service businesses. Operating margins, once deeply negative, are now consistently above 20% on a non-GAAP basis and trending upward. Net margins, while still volatile due to fluctuating stock-based compensation, have stabilized above 10% GAAP, something skeptics said would never happen. Return on equity is now above 8%, and free cash flow yield sits near 5.2%. Modest, but a meaningful improvement from just 2 years ago when cash burn dominated the narrative. Capital expenditures remain light at under $50 million annually, and Palantir's R&D budget, over $600 million annually, is not just high but highly efficient, producing scalable tools reused across clients. Balance sheet strength. The company has no long-term debt. Its balance sheet holds over $3.4 billion in cash and short-term investments, providing a strategic war chest that not only ensures resilience in a high-rate environment, but also gives Palantir flexibility to invest, acquire, or expand without dilution. In fact, its share count has stabilized, no longer ballooning from SBC. EPS trends and shareholder returns. Earnings per share have climbed to 24 cents on a GAAP basis, with forward estimates for 2025 pointing to $34, a more than 40% increase. While Palantir does not pay a dividend or engage in buybacks, its improving earnings trajectory may pressure management to consider capital returns in the future, especially if cash continues to pile up faster than it can be deployed. Recent developments. 2025 has already been a pivotal year for Palantir. The most notable development has been the rapid scaling of its artificial intelligence platform, AIP, a framework allowing clients to build and deploy large language models securely within the Palantir stack. Unlike consumer-facing LLMs like ChatGPT, AIP is optimized for enterprise use, where data privacy, compliance, and decision accountability are paramount. The Department of Defense expanded its AIP deployment for battlefield simulation and logistics optimization, a landmark contract worth over $500 million announced in March. Meanwhile, commercial clients from biotech to manufacturing are using AIP to transform drug discovery, preventive maintenance, and customer personalization. Palantir also surprised analysts with a bullish forward guidance in its last earnings call, raising full-year revenue expectations to $2.85 billion and projecting free cash flow in excess of $800 million. This was well above consensus and triggered a series of analyst upgrades. International expansion is also gathering pace. In addition to deeper NATO and EU government relationships, Palantir has expanded in the Middle East and Southeast Asia, especially in energy, logistics, and public health. These regions are proving fertile ground for Foundry's full-stack implementation strategy. Technical and valuation analysis. From a technical standpoint, Palantir has been on a solid uptrend since late 2023. The 50-day moving average is comfortably above the 200-day, with strong support at $19 and resistance now forming at the $27 level. The Relative Strength Index, RSI, recently touched 70, but has cooled to the mid-60s, suggesting bullish momentum with room for consolidation. The Moving Average Convergence Divergence, MACD, remains in positive territory, confirming the upward trend. Now to valuation, an area where Palantir has long confounded traditional metrics. Its price-to-earnings ratio currently stands near 75, which appears rich until you consider its forward trajectory and margin expansion. On a forward price-to-earnings basis, the multiple drops to around 55, still elevated, but arguably justifiable for a high-margin software infrastructure firm with defense-grade stickiness. The enterprise value to EBITDA ratio is approximately 38, while the price-to-sales ratio is down to 11, substantially lower than its 2021 peak of over 30. While still priced for growth, Palantir no longer trades in the realm of fantasy. Importantly, its PEG ratio, price-to-earnings growth, stands at 1.4, suggesting that its valuation is roughly aligned with its expected profit expansion. Compared to peers like Snowflake, Datadog, and even traditional defense software providers like Raytheon's cybersecurity divisions, Palantir's valuation is aggressive, but not irrational. What justifies it is the depth of client integration, government tailwinds, and unique AI positioning. Risks. That said, Palantir is far from risk-free. First, macro sensitivity remains a key concern. High interest rates compress valuation multiples, and while Palantir is cash-rich, it's still perceived as a growth stock, exposing it to risk-off rotations in the market. Inflationary pressure could also crimp commercial budgets, delaying digital transformation spending. Sector-specific risks include intensifying competition. Cloud giants like Amazon Web Services and Microsoft Azure have expanded their analytics offerings, while smaller AI-native startups are nipping at Palantir's heels with more nimble, modular solutions. The AI arms race is heating up, and incumbency is no guarantee of dominance. There are also geopolitical risks. A significant portion of Palantir's revenue comes from US government contracts that are politically sensitive. Shifts in administration or foreign policy could impact contract renewals or public sentiment. Additionally, Palantir's growing global footprint, particularly in sensitive regions, opens the door to regulatory and compliance hurdles. Execution risk is another real concern. Palantir's platform is powerful, but not plug-and-play. Its high-touch deployment model doesn't scale like typical SaaS products. The firm must prove that it can maintain margins while expanding without linear headcount growth. If productization fails, growth could stall. Opportunities. On the opportunity side, Palantir is extraordinarily well positioned to ride the next wave of enterprise AI. As companies move from experimentation to implementation, they need infrastructure that bridges data security, regulatory compliance, and operational integration. This is Palantir's wheelhouse. Sector tailwinds are also aligned. From defense modernization to healthcare digitization, from supply chain resilience to clean energy analytics, the sectors Palantir serves are flush with capital and under pressure to modernize. With public and private investment converging on data as a strategic asset, Palantir's relevance is only growing. The AIP platform represents a potential architectural leap. If adopted widely, it could become the default operating system for enterprise AI, akin to what Windows was for PCs or Android for smartphones. Palantir is one of the few companies combining elite software engineering with deep domain expertise in defense, energy, and industrials. Long-term, if Palantir maintains its current margin trajectory and compound annual revenue growth even in the mid-teens, its market cap, currently hovering around $60 billion, could double within 5 years. The runway is long, and the optionality is real. Conclusion. Palantir Technologies in mid-2025 is a vastly different beast from its controversial public debut. It has matured from an opaque intelligence contractor into a profitable AI infrastructure leader. Its growth is now balanced across sectors and geographies. Its margins are rising. And its products, once described as black boxes, are now central to how some of the world's most complex organizations operate. For investors, Palantir remains a battleground stock, but one where fundamentals are increasingly aligning with the long-term thesis. This is not a value play by any stretch. It's a conviction bet on operational leverage, geopolitical alignment, and enterprise AI transformation. For those with a multi-year time horizon and appetite for volatility, the current levels may offer a compelling tactical entry. For long-term compounding, Palantir remains a rare play, a profitable disruptor with government-grade defense and enterprise-wide ambitions. This is not financial advice, but it is a stock worth watching.